Good afternoon, Maverick Currency traders. It's Joe with you here. Let's do a recap for February 13th. It's a Thursday. Remember, tomorrow will be Valentine's Day. I just like to give you a heads up because you don't want to get caught without that, right? All right, so I've got my 2 cents. It's been a pretty exciting day. Let's just jump straight into it. I'm going to give you my 2 cents on what happened. Let's take a look at some stuff technically, and if I've got some trades to share, I will definitely do that.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's just get straight into the market analysis here, folks. And what it was just more reaction to more changes, right? So the U.S. equity markets moved higher after some clarity in tariff implementation. I left that in quotes, folks, because we're worried about tariffs on China and Mexico and so on and so forth. But what ended up happening is President Trump came out and said that, you know what, we're gonna push out, see what they push back with, and then it's going to be on a per basis, kind of a negotiation process. I don't think that had a lot to do with it, more so than kind of an April target versus we're going to do this immediately and start it in February. So that does give the markets a little bit more flexibility. So the U.S. dollar itself really kind of fell apart when that news came out, but the U.S. equity markets themselves really moved higher. So you've got this ideal of, hey, the dollar is going to be super, super strong if you implement a lot of tariffs on other countries. So I think it was kind of priced in, and we saw a little bit of price action coming out of it. But the U.S. markets did the opposite. A lot of fun, right, folks? So let's take a look at how we finished. The yen and the franc, nice little bounce. Euro and the pound, kind of flat. CAD flat. Aussie, everything was kind of flat. It was the U.S. dollar that had that slide after that announcement. And we'll take a look at that chart here in a second. How else? Well, the S&P up 1%. World index up 1%. Crypto down 0.48%. A lot of that was because Litecoin just took off and everything else just kind of slid, but they're all kind of flat. Gold up a little bit and oil up after it's been kind of beat down over the last couple of weeks. Let's get into our cryptos here, and you can see down across most of them, but that Litecoin moved to the upside about 3%. Kind of just balanced them out. They are just very reactionary regardless of what we're seeing here. So let's just get into that. So what I've got is a bullish outlook. Above the 20, above the 50, the 20-50 slopes there. I talk a lot about this bullish flag pattern. I'll show you here in a second. And it is actually broken above that. Now, when it comes to expectations and worries and policy changes or things that could be reactionary, how I feel is one way, but technically I'm another. And when I see a technical breakout based on the S&P here, I have to score it as such. That's why the +2. So let me show you what I'm talking about. We saw this once before with a bullish flag pattern, and it did move higher. Not a lot of volume participating. So the second ideal is, hey, can we get this same flag pattern? It's a little more shallow than the last one. I mean, I guess I could kind of take it off of this. But the idea is to come back and forth as long as it wants to. But once it exceeds kind of this sloping area, it's technically broken out. Not only that, the S&P itself, which is a little bit different than the Qs or the diamonds, is threatening some previous or all-time highs. So I can't be less than that +2 outlook. There is a lot of strength out there, especially when we're seeing some of these earnings and what the U.S. economy is doing in general. Speaking of which, let's just jump straight into that economic data. And this is kind of the things that we've seen. I'll go straight through the U.S. side because there's some other things I want to talk about as well. This CPI number came in a lot hotter than expected, showing that inflation is still around. Powell came out, you could see he came out and talked. He said that inflation is still, quote unquote, sticky. That means that we have a consumer that's still confident, still strong, still active. I mean, it's a good thing for the economy, but it's horrible if you're betting that interest rates are going to be reduced or cut. So kind of a standoffish, sit back and see what happens FOMC I would expect moving forward. As we move a little bit further, folks, I might as well just show you the Great British Pound, or Britain's GDP, a little bit higher than expected, showing that they're also pretty strong as well. These numbers can be revised, so we'll see how that affects it. It didn't really impact the pound, but the pound is actually kind of stable. The euro and the pound are actually one of my two favorite currencies because of the stability that they have. They're fun to pair against other things. We'll get there in a second. The US PPI kind of comes in line with what the CPI did, but the unemployment claims a little lighter than expected. So everything's showing that, hey, you know what, we're not falling apart just yet. The U.S. economy is pretty stable and showing that there's some strength out there. Now, tomorrow we will have retail sales, but I don't think that's going to be too big of a deal based on the news today when it comes to some of the tariffs there. So let's just get straight out there and take a look at some of these currencies. As always, folks, I'll start out with the yen. And as you can see, the yen looked pretty decent. Now, this is just going to be all velocity for now. This is the velocity score here on the yen. It had moved quite a bit lower. We watched that over the last couple of days. It looks to me like it might roll over again. I'm not really confident in it kind of emerging, but I don't think it's going to react as much as what we saw the US dollar do. It might roll over and break down. I'm going to keep it as a -1. I just see the RSI coming up a little bit anemic, kind of rolling over around that 50. Little drop here in the moving average. Flip on the SAR. I would not be surprised to see a little bit of consolidation here. Let me grab my box. It would be interesting to see if it kind of sits back in this area and just kind of waits to see what the U.S. Policies changes do, or what the dollar does. But past that, I'm just kind of keeping it at a -1, but more of a 0. In fact, a lot of these are 0. It's pretty interesting once you see my slide here in a second. Now, here's the dollar. Take a look at this. It was all fine, completely moving sideways. It's okay. Little reaction here. Inside day, it fell over, but then it breaks the support level, and it really did it based on news. I think a lot of it was priced in for the tariffs to actually go through this month. That's my 2 cents. I have no idea, folks, but just based on how it reacted. A flip over, the moving average is flat, SAR flip. This is a little disheartening. Now, I moved it to a -2, and the reason because it was the flip in the SAR and the drop in the RSI, but more importantly, you guys know how I roll. I just hate it below that level of price. So I put it at a -2 for now. Now, does that continue? I don't know. Maybe these policies change in 2 or 3 days. But right now, whatever was priced in seems to be moving itself out. And that's enough for me to identify a move. Let's move over to the franc. The franc had a little bit of a recovery bounce around that same time. You can see a little bit of a bounce higher there. It's not like my favorite. I don't think it's going to be the emerging currency. You could see that it's kind of back up to a resistance level here. It did push above that 50. The SAR flipped, and we got this little smiley face going on the moving average. So I just bumped it to 0 for now because I'm a little bit cautious on this because of the reaction it had when the US dollar dropped. Now, the euro and the pound are pretty similar. I wanted to be kind of glass half full on those. I got the euro here at a +1. I just like how this shot up and it stayed up, right? A little bit of a reaction, but it stayed here. Look at the shadow. So we'll see if this can consolidate or stay high. But if this starts to break above this resistance, I might be a little bit more leaning towards a +2, +3 on this. But I do like where it's going. Here's the pound. I would kind of favor the pound more than the euro just based on this pattern. Because let me get my box out here because it's already back up to this area. So if it could consolidate, nice directive move right off this bottom here. The RSI is staying comfortably above that 50, more sideways, but it looks like it wants to maybe threaten some of these areas. As long as it doesn't get weaker, I think this could be something that we could pair weaker currencies against. So this will be my favored stock, even though I've got it at a +2 and the euro at a +1. I just like the stability in it. Here's the Canadian dollar. This bumped up to a +1. I like this steady climb on the moving average, a steady move sideways here on the RSI, and then the flip-flop on the SAR. So I gave it, you go +1, 0. I gave it a +1 because it's kind of showing this consolidation. A move higher would be kind of nice past that. Now, what's so difficult about this, folks, is everything can change based on the policies or the back and forth. We talked, the tariffs are going on to all different countries. However, we just heard that they're going to be a per country basis. Negotiations back and forth. The only thing that we know of it's not going to be immediately in February. It might be towards April, but that can change as well. So I think a lot of these are going to be pretty reactive, at least in the shorter term. All right, let's move to our risk on currencies. Here's the Aussie. Kind of jumping around. I gave this a 0. It's kind of within a range, flip-flopping on the SARS. Looks like the moving average is kind of flattening out. RSI dipped below the 50, kind of wants to stay above it. I can't really get much out of it. And the Kiwi, looks a little bit weaker, so I put this as a -1. I didn't really want to punish it. It does have some pretty decent support down in this area. So if it can just kind of sustain what it's been doing and maybe start to climb a little higher, it's more of a sideways to me than it is anything that I can use against or for a currency pair. Let's jump into the cryptos real quick while we're here, and you'll see that they're all pretty much sideways. Take a look at that. So flip-flop SARS, sideways. Moving average, sideways RSI. Well, that's Bitcoin. Here's Bitcoin Cash. Consolidation, sideways. These feel to me like they're ready to just explode in one direction or the other, and I truly believe it's going to be news-related, more specifically probably policy-related. Let's take a look at Ethereum here. Complete same chart when it comes to this momentum. Now, Litecoin itself showing something a little bit more promising, where, hey, it looks like it's a pattern that I could maybe take a look at. All right, well, if it can get above this area, resistance breaking, I know I do like when stocks, set a high and they retrace a higher low and then they retest this area. It goes all the way back up to here too on at least the velocity 4-hour chart. So yeah, it could emerge, it could shoot up, that's fine. But for how long? I don't know. But of the cryptos, it is definitely showing the most strength for sure. So let's get into some possible trades, folks. This is difficult because this world is a little bit more reactionary than I want it to be right now. But if we're going to do it, let's go ahead and take a look at, I've got two. They're similar, just depends on which one you want. So both are going to be paired with the US dollar. I'm not sure if this weakness continues. I'm not sure if this was just kind of a one and done, or maybe we get some news tomorrow that flips it all over. But if it was a reaction showing that, okay, the negotiations could be a little bit more equal or even than a blanket, look, we're going to just tax the heck out of you, then the dollar could continue to drop. If that happens, I do like the pound and the euro against it, as long as they can stay flat or even show strength. So I just like the pattern here. It's a nice little ascending pattern going on with the pound, and it did break out today. We got a nice move on the RSI. Looks like the moving average kind of wants to move up. It is a nice break to the upside, so it has confirmed. If this is something you're a little bit worried about because it might feel a little bit overextended, well, then I also liked the Euro US. You could say it's a little bit slower, but understand, folks, we're actually pairing a little bit weaker of a currency than the pound. So out of the two, the pound is definitely stronger than the euro, but I do like the euro because it has a little bit more room to grow if the two can stay flat or a little stronger than the US dollar in the shorter term. So this is kind of that situation I'm looking for. So when you reach targets, for instance, if you get into this, just be ready to kind of pull them out. But we are really still susceptible to a whole lot of reaction. So in conclusion, folks, that's pretty much all I got. I just got the U.S. equity markets breaking into bullish area. Now that's technically. So technically, I'm just going to kind of follow where it's going along. There's still, I'm seeing it in both the currency and the equity markets remain very reactionary, and it has a whole lot to do with the unknown known. I like how Corey says that, because we know something's going to change, but we're unknown when it will and how it will. So we've got that. Take a look at this velocity score. Everything's kind of grouped together, -2 on the U.S. because of a policy change, and then everything else just kind of in that middle, kind of sitting back. So there is opportunity out there. Just be very selective with it. Make sure you are very aware of your position sizing, and that relative strength and weakness, folks, is only going to stay, I think, shorter term, but just make sure that you're properly position sized and you're using those stops. All right, folks, thanks for joining me. We'll talk to you next time. Bye, everybody.